But yeah, I'll give it one more minute and then we'll get this started.
Fuck, man, I might just close these fucking shorts.
I'm gonna be honest. I I saw everything you saw except that change of character and break structure, like that final displacement. That shows you the market wants that way. Alright, cool. We'll get this started. What's good, everybody? How y'all doing? Welcome back to another stream. This one, like I was saying earlier, is going to be a reiteration of what we were going over last stream, as well as some market sentiment and some market structure analysis. How I see market structure, how I can simplify market structure, and hopefully how that can help you guys when understanding candlesticks and looking at price action and trying to trade. We'll be going over premium discount ranges too, as well as a recent play that I went over this morning with Divine. I was in chat. We were talking about this long that we ended up catching this morning. I believe Casper caught it too, a couple other dudes. But we'll go over that, how we ended up catching counter trend longs, and how you
I'm
guys
still in
can
it.
start to see that. You still in that? Yes, sir. Yes, sir. We
Yeah,
could
we
we
up.
could definitely see high.
I'm up 150 on 68.
Yes, sir. Yes, sir. That's what's up. That's what's up. But yeah, we'll go over that. Get you guys a better understanding of the price action that happened today as far as lower time frames go when trying to catch trades, scalps, intraday setups in these ranges when we're ranging like this to give you guys a better understanding. So when we're first looking at ranges, and how I always talk about what I first look for is market structure, right? We did a little bit of market structure analysis last stream, but we'll go over a little bit again this stream as far as this range goes. I want to iterate confirmation versus confluence as well, and how that was used with that certain play today. So as far as market structure goes, right, we're looking for a strong highs, strong lows. A strong high is a high that caused a new low. A strong low is a low that caused a new high, right? So in this case, right, if I'm looking at my higher time frame swing structure on a daily chart, to make this simpler for myself, a lot of the times what I'll do is I'll draw out my highs and my lows, right? So this is my highest point that caused my lowest point here and there as well. So my green structure, right, is my daily structure that I'm looking at. So as I'm looking at this, I'm like, okay, it's very bearish, right? We have our strong high here, our supply introduction that we went over after that liquidity raid, right, that introduced our new low. This is my overall daily structure. It is bearish. We could possibly be pulling back for a lower high, right? Or create a new high. We can't look for any type of bullish swing long setups as far as this goes until we see that strong high breach followed by a 4-hour higher low, right, to signify that our trend has switched and we can continue to take trades to the upside, possibly higher into the range. So right now, as far as swings go, right, I'll only be looking for shorts to be trading the trend, right? But we still need our lower time frame confirmations as far as that goes, followed by supply and demand, right? Our liquidity and what we're looking for. So daily structure is bearish, right? If I'm going now on my 4-hour structure points, we talk about change of characters. As far as market structure goes with breakup structures too, but I'll show you guys what I kind of did to simplify this for myself and how I kind of learned it when I first started off. So I actually didn't understand or didn't know Photon or understand the term change of character when I first started Smart Money Concepts. And so the way I learned this was, and the way I understood this was, as were fractal trends, right? And what this means is you have your trends within trends. So a 4-hour or a daily trend, right, could be in an uptrend, but your 4-hour structure point or your 4-hour structure, right, could be in a downtrend. But that is only a pullback even though the 4 hour is bearish, right? That's only a pullback for your higher time frame bullish structure point. It could be pulling back for a higher low. So I see these as trends within trends, and I look at change of characters as lower time frame breaks of structure to confirm my higher time frame bias. So I don't necessarily always call it change of character, right? You don't see me using this term change of character a lot. I'll just say lower time frame break of structure to confirm my lower high for the certain time frame I'm using. Now we're going to talk about internal external ranges and how we can use this to our effectiveness for our time, as far as what type of trader we want to be, as far as a scalper, right? Intraday swings, whatever type of trader you want to be, how you can fit this to your schedule and how you can make this comfortable for you, right? So let me go ahead and delete this. All right, so we talked about our daily structure is bearish. I'm still looking at my 4 hour structure is bearish as well, right? Because if I take away the candles here, just to make it simpler for you, right, we have our high, strong high here that caused a new low right here. So I consider this as a weak low and can be taken out. I'm assuming this to be taken out until proven otherwise, right? Until this strong high is taken out to show that the market is bullish again, showing signs of bullish strength, right? And I can look to take long positions farther into the range upside. This is a way that I can simplify this for myself as well and kind of see, okay, look, we have an internal break of structure here, right? And then we have our daily trend break of structure here. So I'm looking at supply zones in these areas, right, as a possible lower high to look to take trades to the downside, because I'm assuming this as a weak low until this strong high is broken. So now if I put the candles back on, go ahead and take this away for you guys. You guys can now see how that structure plays out and how we got our candlesticks, and how I took the candlesticks away, right? Showed you that market structure, and now you can see with the candlesticks adding those breaks of structures, you can see how that plays out following, right? Just to simplify it, get rid of the noise of all these wicks, right? What the market wants you to think it's doing, what the market wants to manipulate you, or how it wants to manipulate you, right? So we talked about supply introduction, where it was introduced, and that was at this wick, right? This institutional candle, this buy before sell candle, bullish, or sorry, bearish engulfing candle following, broke internal structure points and ended up continuing the trend to the downside. So this is where I believe supply was introduced. Let's go ahead and draw that liquidity here, show that raid. Then that supply introduction here. Mitigation here. Right, you can see your internal break of structure to the downside, supply introduction here, another following break of structure to the downside, supply introduction at the swing high point, right, that lower high here. We're looking to catch a lower high here because of this now break of structure. This is internal. So now you can see how all these lower time frame break of structures come together to follow the full trend, right, to follow our full 4 hour daily trend, which was bearish. We assumed this as a weak low. Weak low ends up getting taken out due to supply introduction after a liquidity raid to the upside, and then we get that continuation. So this low here was taken out, right? This was your initial break of structure, supply introduction after a liquidity raid. You get your second break of structure, supply introduction. Third break of structure, we're looking for a lower high in this scenario, right? Some type of supply in this area. Now, if I'm looking for my swing high to swing low, in this entire move, right, I'm doing the extremes. Market loves extremes. Market loves to take liquidity both ways. So now I have my range from my swing point that broke structure, right? I could even do this entire range here to get that entire move that broke structure to the downside, right, on higher time frames. And now I can look for my supply or demand zones to be able to take trades off of, right? because our market structure is bearish, right, I'm going to be looking to short in premium, and possibly long in discount if our lower time frame market structure can fall in place with that, right? So before I give you guys the future sentiment as to what I believe is going to happen next, where I'm going to look for next, we'll talk about what happened today and how we were able to take this trade today and how it made sense to me, how it made sense to Casper, how it made sense to others when they were looking to take this trade this long here. So we have our range, right? Break a structure to the downside, supply introduction. I'm looking for some type of demand if I want to take some type of counter trend longs. But right now, before at this point, right, if I hit the replay, nothing is showing me that. I'm not taking any type of longs yet. No structure is bullish to me yet, right? We're just letting retail or whoever is trading this, right, get shaken out. Let them do their thing. And from there, we'll see how that goes. Now we start to see some type of bullish trend shifts, right, internally, right? Remember our entire swing high to swing low point, this strong high that caused this strong low, is still bearish, right? Until I'm over this, what I consider the strong high, I'm not looking for overall buys into higher parts of this range yet, right? So I start to see some type of bullish internal structure, right? If I go to the hourly, we can see these lower highs that were taken out here. Break of structure to the upside. Let me get rid of this. And break of structure to the upside is right here, right? So now I have some type of internal demand, possible demand, right? I see this impulsive move to the upside. I look for my consolidation. I see this accumulation range, right? So I know that there has been an introduction of demand here. I also notice all of this sell side liquidity, right? We have all of these equal lows right here, as well as all of this demand. So if I'm looking for my consolidation, right? Extreme swing high to swing low, right? This is my consolidation, my shakeout point, right? This is liquidity right to the downside here. Accumulation, lower time frame break of structure to the upside. You get the following move, right? We have our demand creation followed by our expansion. Just to highlight that. Right now, if I'm looking for possible counter trend longs, I will wait for some type of liquidation rate to the downside, possibly here. Look for market structure demand zones to play suit, possibly here, right? So I'll probably set alerts at 1825 or this 1810 zone. Wait till market structure comes into that zone or price comes into that zone and market structure proceeds with, right? So now we wait. It starts to show. We come down, right? We take out that sell side liquidity I was talking about here. We start to show demand introduction, and this is where we started to get into our trades here, right here. And let me just go ahead and play this out real quick to where we are at right now. We can get rid of this, and then I will show you guys how we ended up taking this trade, right? So we looked for our demand, right? Our accumulation, we ended up mitigating that demand as well as liquidating this sell side liquidity here. Right, so we took out all the previous longs within this impulsive move to the upside. So now, and have mitigated demand, right? Filled our imbalances within our range. So now we're looking to take trades to the upside, right? As far as counter trend longs go, if our market structure can proceed. Market structure hasn't proceeded yet. We see all these confluences, right? Our demand mitigation, liquidation raid, as well as our buildup of early shorts, right? So what this is showing is that this move here, our expansion to the downside, right, when we started to create this consolidation in this area here, right? Retail is fighting back and forth. They don't know if we're going to continue down, or they don't know if we're going to catch a bottom right here, right? Some are looking to knife catch, or some are looking to catch the continuation. So we have a lot of shorts getting in trades, right? We can see the equal highs start to be formed on a higher time frame, right? An hourly time frame, as well as a demand mitigation, liquidation rate of previous longs throughout this range, and our market structure proceeds, right? So if we're looking on lower time frames, we have our hourly break of structure to the upside. So now I'm looking for a 15-minute higher low to confirm that, right? That hourly possible break to the upside, and look to play demand zones up here or even higher into the range. And this is what I'm going to show you guys in a second. But we see our buildup of our buy side liquidity, right? A lot of early shorts getting into trades. We look for now highs to be taken out, lower highs, highs that caused a new low, right? We get one right here. Supply mitigation right here, right? Buy before sell candle, right? Our drop base drop area of redistribution on lower time frames. We get that lower time frame break of structure to the upside. So now I'm considering this low as a strong low on lower time frames, and this high as now a weak high on lower time frames, right? This is my impulsive move that gave me my liquidity range, right? This is when we started to see the buildup of liquidity, right? Gave me my range, and then this is where I can start to see things more clear. And what this means is I'm going to start to draw my range now. To make this clear to you guys, we'll do this. And then my discount range. Right, so now I have my impulsive move to the upside on lower time frames, right? I'm looking now for liquidity within the range, as well as my premium discount, where I'm going to be looking to sell within the range and where I'm going to be looking to buy within the range. I notice a buildup of liquidity here, right? We get our longs and trades. So right now we have both short sellers and buyers, right? Fighting within this range. We get a buildup of liquidity with everybody thinking we're going down here, right? Buildup of liquidity, everyone thinking that we're catching a bottom here. So now we're going to look for what type of liquidation rate we get, right, for the introduction of either demand or supply within our range to be able to take our trades. Now, if we're looking at this, right, where are we getting our liquidation rate? It's to the bottom, right? We get a liquidation rate to the downside, as well as a mitigation of lower time frame demand that caused this break of structure, right? This move to the upside. So I get a liquidation rate to the downside, taking out my old demand, as well as mitigating demand. I'm looking for now another introduction of demand. So now that I have my 30-minute, what I've deemed break of structure to the upside, I'm looking for a 15-minute and a 5-minute to suffice, right? So if we're looking at our institutional candle, right, our last sell before buy candle, as well as the impulsive move that brought us a break of structure within the range, I'm looking at this candle, right? This entire wick. Now you guys can also see how this is, if I were to take buys off of this demand zone right here, how this is unconfirmed. As far as this goes, right, we still need our market structure to follow in suit to be able to take these trades to the upside. So we get our liquidation rate to the downside right here. On the 5-minute now, this is where I started to get interested in this trade, right? So the reason for this is we get our liquidation rate to the downside, demand mitigation of these, and we fill these imbalances over here of these candles, right? This is our impulsive move to the upside. So right now, to simplify this for you, I'm looking at it like this and waiting for this to happen to catch this. That's it. That's literally it. That's how I'm trying to confirm this, to just catch this trade and catch along to the upside. I'm looking for a higher low. That's it. But all this price action and data is what we're going to have to study, right, to be able to catch that. So we fill imbalances here, mitigate supply here from this lower time frame breaker structure to the upside. But as we mitigate that supply, we actually break lower time frame structure points here, and this is what I will show you guys. Right, so we have highs created here, breaker structure to the upside. I'm looking for a higher low to confirm that. We don't get that higher low yet, right? So I'm not in any trades here. I'm waiting for an impulsive move, right? Another break of structure to the upside. This is what I receive. Right, this is our impulsive move to the upside. Now I'm looking for the consolidation before that impulsive move to the upside, before that breakout, right? To signify my demand zone. Where's that consolidation? That consolidation is here. So now I'm looking for a mitigation of this demand, right? I can look for my institutional candles, or I can look for a mitigation of this demand followed by a lower time frame break of structure to play along to the upside now that I have all of these confirmations, right? Or these confluences, technically not confirmation yet. Right, so if we're looking for our institutional candle, right, our last sell before buy candle within this range, if I'm on the 1 minute, or even the 5 minute, if I want to look at the 5 before I go to the 1, right, I'm looking for that candle before the candle that caused that displacement, right? This is your demand zone. So you can see how that zone that we accumulate, or we found, right, as our demand, that lower time frame accumulation, holds many different confluences on different time frames, right? You'll see that your demand zone or your supply zone, your point of interest, will hold the same confluence on almost every single time frame depending on the trade, right? So that's how I can signify this area as a good area of confluence, right, to be able to take my trades. So if I'm on the 1 minute, again, showing you guys where we were at, impulsive move to the upside. We look for our consolidation for the breakout, our demand zone. This is our demand zone right here. Now we can refine this to institutional candles within, or we can look to play market structure following a demand mitigation. So something that I wanted to show you guys, which was really, really cool, right? As far as these institutional candles go, if we're looking at the last buy before sell candle, or sell before buy candle, sorry, within our demand zone, our consolidation before breakout that we figured out, right? It's going to be this candle right here. So now I can look to either, if you play the 50% of fibs, play the 50% of this range right here. Now targeting that liquidity to the upside, right? All those shorts in trades. The reason from this is, right, we talked about our higher time frame structure. So let me go to the 30-minute. Our 30-minute structure, right? In this case, for this intraday trade, we're treating our 30-minute structure as our higher time frame structure, right? And we need, and from that, we're going to be going to the 15-minute 5. My bad, guys. My mic just cut out there for a second. Let me go ahead and plug it in. But as I was saying, and as we were going, right, we have our breaker structure to the upside. Now demand mitigation of this breaker structure to the upside, another breaker structure to the upside on lower time frames, demand creation as well, and now I'm looking to take trades to the upside. So from this, let me go ahead and plug this in. My fault, guys. cool. So, as we are looking at our lower time frames, right, and we are looking to take either trades off the 50% of this or scale it down even more. And this is what I'm going to show you guys about the fractal nature of the market and how you guys can literally see all of these inefficiencies filled, as well as liquidity taken within these moves before we get the final move. So literally it's just market makers getting as much money as possible, taking out as much liquidity as possible before that final move. So that's what we look for. We look for all the liquidation rates following that demand or supply introduction, and then we look to take trades that way. So if I now refine this for you guys, and this was the cool part that I wanted to show you. Now we'll get rid of all of this. As well as this demand zone here. So now if I can refine this down, I'm on a 30-second time frame now. We can see that institutional candle now within this minute institutional candle that we found, right? So now our risk to reward has become increasingly less. Now, I'm not going to recommend that we use the second time frames all the time, especially for people trying to learn these concepts right off the bat, right? Stick to your higher time frame, stick to your plan, and don't try to catch these crazy R&R trades because you will get really frustrated getting stopped out. This is something that you want to refine down by each time frame. I feel like this is the best way to approach smart money concepts, right? So meaning if you're playing hourly to 15-minute structure and you've been hitting really good, right? Now start to play 15-minute to 5-minute structure and you've been doing really good. Now you can start to go from 5 to 3, 2, 1, right? And then if you've been hitting 1 minute and you're like, well, I still want a better risk to reward and I'm seeing everything play out how I want it to, then I will look to go on my lower time frames, right? But I showed you guys that now 30-second demands on that we created, or right, institutional sponsorship. I can go to the 15-second now. Last sell before buy candle. Right? I can go to the 5. Right here. Look, we can see our displacement candle, right? I'm on a 5-second chart. We can see our displacement candle and see the same exact situation. See that institutional sponsorship, right? That displacement candle that says we want to go to the upside, followed by our break of structures to the upside, right? We can see that accumulation. Here's your institutional candle. Now that I'm on a 1-second chart, we get our mitigation, and then we go. Now look at this risk to reward, right? This is what we strive for, right? As smart money traders, we strive for these sniper entries like this, right? With a 0.9, 0.8% stop loss, targeting 3% within the range, right? Now a 3% play from all this confluence has become a 42 to 1. Right, so now that I'm targeting my hourly highs, right, my 30-minute highs, but I'm using all of my lower time frames to confirm, you can see we get that final continuation and following that completed trade. Break a structure to the upside, demand mitigation, more break structures to the upside, more demand creation, more liquidity being created, longs are taken out, final move is introduced, right? Demand is introduced, right? This is your institutional sponsorship here, and then you get that final move to the upside. So we can see here, even in the start of this range, I'm still looking for a direction, right? So yesterday, I'm saying, okay, we could possibly be bullish, right? but I still need that higher low to confirm. Um, we get our higher low, we get our lower time frame confirmations, and then we get that continuation from that. So I'm looking at, right, my internal breaks of structures, as you could call those change of characters as well. I feel like they are both the same. It's going to be your first aggressive sign of strength or sign of weakness one way. But I just use internal breaks of structures as what I consider my change of character to kind of simplify that. But we saw how we had our premium discount range. We were in discount, right? We took longs over here. We mitigated demand. More market structure breaks to the upside. We're still in discount. We created demand over here. I'm looking for a lower time frame institutional candle and or order block. I take my trade to the upside and we get that continuation from that. So it's a lot of work that we're doing, right? But because of this, we can put what we call effective time into our trading, right? And what this is going to be able to do is allow us comfortability as well as proper time management. And what this means is I can now figure out a time frame, right? A possible time frame to trade during the mornings based off of volume sessions, right? Based off of when there's the most money in the market, when there isn't the most money in the market, when the moves are going to be hitting, when they're not going to be hitting, right? And work this around my lifestyle to be able to treat this as a job and make this as a job for me. So I'm doing this every single day at the same time, right? Looking for the same thing, having my plan. If my plan doesn't hit, then I'm not in the trade. And that's just how I'm going to be trading. And that's how we can make this effectiveness for our time. Now, the difference that we're going to be talking about versus for time effectiveness as far as the ineffective trader versus the effective trader and how we can use this theory to our advantage, what we just talked about, right? It is if I'm an ineffective trader, and what this means is I'm the lazy trader. Right? I don't want to do as much work. I don't want to have the patience. I don't want to wait for those final moves, those final liquidation rates, those final signs of strength or signs of weakness, followed by my market structure breaks and confirmations to be able to take my trades. I want to just set limits at a higher time frame zone of demand because I believe it's going to go up, or yada yada. However you want to trade, right? The ineffective trader, and how I'm going to be labeling this, would see this large move, right, this impulsive move to the upside, and tell themselves, hey, we could possibly create a higher low into this range, right, possibly come higher into this range. Up here, mitigate zones of supply up here that were created, or even higher up here into these zones of supply. They look and say, hey, that's a possibility. I'm going to take the chance. I'm going to go ahead and set limits on this demand zone right here, right? So they set limits here. 3% stop loss, targeting this newly introduced supply zone here at 2047. They're tapped into their trade. They're instant green, so they say, hey, I might have caught a higher low. This might have worked out for me, right? This could have worked out, right? But now you look at this and you're like, well, I set limits, right? I see this impulsive move. I start to see us pull back. I set limits, let's say June 1st at 11:30. Price taps me in June 1st, around 4:30 Eastern, right? And now I'm waiting, and my trade is roughly a 1-to-1 about a day later, right? Trade is roughly a 1-to-1 about a day later. After I set these limits on this higher time frame zone of demand, after I see these two impulsive moves to the upside, I'm sitting roughly at a 1-to-1, right? Now this took him about a day. It's been about a day, been about 2 days, right? And they're sitting at a 1-to-1. So if they invested $500, they're up $500, right? So what this means now is, as the effective trader, they're staying patient, right? They're waiting for those final moves, those final confirmations to show that the market wants to move a certain way, right? We get those moves, all those confluences, all those confirmations that I talked about. And as the effective trader, within the time span of About a day and 6 hours, you're sitting at a 1-to-1 as the ineffective trader. Now, as the effective trader, in about 8 hours, you just completed a 42-to-1. Now we can see how these smart money concept traders and how these concepts can be applied and how quickly accounts can be grown because of this. Because now I'm literally using hourly and 30-minute structure to catch 42-to-1s on a 3% move. Stop loss is 0.08%, right? I could realistically put $1,000 on a 15 times and risk losing $10, right? Not fees, not counting fees, everything like that. But if liquidity providers were true and everything were how it was, I could realistically throw $1,000 on a 15 times and risk losing roughly 1% of my account, which is actually nuts, right? That's what we want. We want to decrease our risk, increase our reward, and increase our time effectiveness as well. So now you can take one trade like this a week and be fine, right? Because this could be a crazy port percentage gain based off of your risk management, right? So this is how we can use this time effectiveness to our beneficiary, right? To our advantage to be able to take these lower time frame trades, and they print for us, right? They pay us like those higher time frame swings, like those 30-40% moves. So because now I'm not even worried about catching a 40% move. I'm gonna sit there, I'm gonna study my ass off, or I'm gonna do whatever I can do to be able to figure out these lower time frame swings, to be able to get paid in a week in 8 hours, to be able to get right. Because now I'm good. I'm good for the week. I can do all my studies, do everything I want to do, because I did the work. I sat there for a couple hours, waited for everything to fall into place, and now I can take off a week. So that's that time effectiveness, right? That we want as traders and we want as smart money traders, to be able to grow our ports, as well as allow us comfortability, as well as allow us a lifestyle within trading, allow us to be able to center um, different things that we want to do in life within our trading, right? Different hobbies, whatever you do in or want to do, right, within your life, or want to strive to be. This is how we could do that, right? Because we can manage our time effectiveness. We can now make the market work our way, and that's what market manipulators and hedge funds and everybody in these higher positions, right, with a lot of money are doing. They're making it work for them. So now how can we mimic that? We need to make it work for us. And how do we do that? By doing the work, by staying patient, and by letting it show its hand to us. So with that said, and with the time effectiveness versus ineffective time, we can now see how just by doing a little bit more work and just by staying a little bit more patient, we can greatly increase our abilities as a trader, as well as our account abilities as a trader. So now I'm going to talk about a little bit of a market sentiment stream, probably about 10-15 more minutes, and then we'll probably wrap it up for the night. But I hope this time effectiveness and showing this range and all this confirmations that led to this counter trend trade that we took today showed you guys a little bit of what is required as far as the work for these concepts, right? Because we want all of that. We want all of those confirmations. We want to wait for everything to fall into place if we want to make the most amount of profit possible, if we want to profit the most, right? So let's go a little bit into ETH now. We talked about how we're in a bearish structure. I showed that bearish structure, right? This is our strong high. This is what I consider our weak low. So I'm looking for this weak low to be taken out, right? As well as I still have my confluence of those 1679 higher time frame weekly lows that we were talking about, right? Before I look for that full reversal. Now, I'm not saying we have to hit those lows. Something with liquidity and people will start to get confused out when they start to get into these liquidity and smart money concepts. Is they'll say, well, we're not going to reverse or do anything like that until we do this, or it has to do this. And a mindset that we need to have as smart money traders is that it does not. It does not have to do this, right? I'm literally just looking for a set of rules, waiting for the set of rules to fall in place, and then taking the trade based off of that. So I honestly don't care what's happening, right? Until my set of rules falls into place, um, which allows us to not stress, right? I don't care. I'm not looking at my phone or looking at my phone when I'm in a trade or anything like that, right? Constantly checking, um, making sure my trade is green or anything like that because I did all the work. I don't I and I'm in and out of the trade. I can set my take profit and then I'm done, right? If I get stopped out, I can go back and understand exactly why I got stopped out and say, hey, well, there was one more liquidity raid to the downside. There was a buildup of sell side liquidity that I forgot to see, right? Or I didn't take the time to do this, or this, right? We can go back and understand, okay, now market moved this way because of this, and I can adjust my strategy to be able to profit the most, right? So with East Range, we were talking about that bearish structure, internal breakage structures to the downside. Now I'll talk about the supply introduction where I could look for a possible lower high to be able to take this trade right to the downside and to those 1769 lows, and where we can possibly play within that. So I'm looking for now what supply hasn't been mitigated, um, what supply has been mitigated, where everything looks to be filled, and then where everything looks to not be filled within this move, right? So what this means by this is we have a large impulsive move, right? Break a structure to the upside. We see higher lows, and then we see something like this, right? We see this imbalance, possible creation of demand here, right? If a high was taken out on this side, as well as this could be in discount, right? So I'm not looking to take longs until we come back down into this zone. Now, with this being said, and with this theory being said, and how we can start to apply smart money concepts to this, and how we can start to trade literally every session, is now that you will get those higher time frame sentiments, right? We get a higher time frame breaker structure to the upside. We're looking for a higher low, right, to take longs. In this trend, take this to the upside. What can I do within that, right? How can I make this effective? How can I be an effective time trader, right? We were just talking about that. How can I do this? I'm waiting for now an hourly breaker structure to the downside, right, to indicate my lower high for this scenario, or my higher high for this scenario, right? My pullback, my change of character, um, my lower time frame breaker structure. So now I can look to take shorts down into my demand zone in discount, right? While I'm in premium, I short now the pullback into discount, take my profit. If my market structure proceeds, I can now look to take longs for the continuation, looking to target literally my entry for my shorts. And now we can start to see how we can follow these trends and follow these moves day by day and understand exactly what's happening. But with this being said, and with this theory being said that we had just talked about here, right? I'm looking for my supply introduction to possibly take a lower high within this scenario, or I'm looking for market structure to give me signs of demand to look to take trades to the upside. Now, where was supply introduced here? We have our supply introduction here, right? Break a structure to the downside, break a structure to the downside here, right? This impulsive move, if I highlight this, right? This was your impulsive move to the downside, caused another internal break of structure. And then I'm going to mark these like this to show you. Remember, this one didn't break structure to the downside, right? This is a displacement candle. We look at this and we say, hey, market wants to go down this way. But what happened here, we created a higher low. So because of that, because we did not breach this low, we did not get that continuation. Why? We got an internal break of structure to the upside. Demand creation here on this candle. Higher low is formed, so we can expect this high to be taken out, which is what happens, right? So I'm not looking at this as an impulsive move that broke structure to the downside. Why? Another way to confirm this as well is for a full confirmed break of structure to the downside, you need your creation of a new low. Then you need a lower high followed by a new low. What? We didn't create a newer lower high or a new low, so we took out that high, right? And then we get our following impulsive move that breaks higher time frame structure to the downside and gives us our new higher time frame weak low, right? So this is our impulsive move now, and this is the range I will be looking for as far as premium and discount and our internal structure, right? So we have our overall range of our entire move that broke structure to the downside. I look and see supply mitigated here. I see this impulsive move. I see this supply mitigated here as well. Supply mitigation, everything looks good. We start to create some longs in trades here, liquidate these traders to the upside here. So we have some buy side liquidity here. If I go to lower time frames, we will probably see the buildup of equal highs. Yep. So now you can see that fractal nature, right? These equal highs followed by equal high. Liquidation rate to the upside, tap into demand, mitigate supply, right? And then our following move to the downside, we never create the new low. So we take out that weak high because we introduced more buy side liquidity here. And then we get that following break of structure to the downside. Now I'm looking for supply zones, possible supply zones in this area to play as far as a lower high goes within this expansion point now, because I see that everything looks to be taken care of here. Everything looks to be taken care of here on this impulsive move. I'm not counting this impulsive move because it did not break structure to the downside, so now I'm counting this impulsive move. Right, so we find our impulsive move. Now we're looking for our consolidation before the breakout, right? To make it in the most simple terms. So where's our consolidation point? Right here. Let me draw my premium range discount as well. Highest point to the lowest point. Get rid of this other one to make it simpler for you guys. Here's my consolidation for the breakout, right? And now I can look for possible order blocks within this zone to play. I'm looking for my displacement candle, right? The candle that says we're going to the downside, right? I see this displacement candle right here. It left imbalances, left fair value gaps, as well as this one here. Now I see my internal breaker structures to the downside here when this low is breached, as well as this low here. So now I can refine this down to this impulsive move. This is the first introduction to me of market makers, of institutions coming into the market and moving the market in the direction that they wanted to move it, right? So this move right here, I feel is my introduction. Here's my consolidation before the breakout. So now if we look at this in a higher time frame, right, we can see that same candle in those two breakdowns that we talked about, right? Now this is on a 4-hour time frame. We can see that displacement candle, that same candle, right? This is telling us the market wants to go this way, and as well as breaking these internal structure points, right? This ended up being a three drives distribution. What this is it's a pattern, right? But I'm not trading the pattern. What I'm really looking for is what's really happening. What this means is what's the definition of the pattern, right? What it's doing is it's building sell side liquidity as we're coming up, right? We're getting clean highs and lows, clean. So now if I'm looking at this and trying to take a trade, right? I'm waiting for this displacement. We get that break of structure to the downside. I have confluence as well with my higher time frame displacement, right? I can see candlestick patterns, bearish engulfing candle, right? My supply introduction. So now I'm looking at this 4-hour institutional buy before sell candle as my supply zone. So realistically, right, within this move, within this range, we can still be bearish until we are over this move. So we can come up here, create a lower high, continue to the downside, take lows here, catch our final reaccumulation, and then go from there. Now, this is kind of what I'm looking for overall as far as ETH goes, and as far as our market sentiment. Now, something too that we'll start to see as far as finding good areas of points of interest, right? You'll start to see a buildup of liquidity before your zone. And now what this does is this will fake out a lot of traders and even smart money traders who have been trading for a while, right? Who see a lower high, they short, and then they see what they believe to be a breakout, right? But it's just a liquidation, right? And a mitigation of unmitigated supply, and then the continuation, right? So I do really like this, how this short setup is starting to set up due to the fact that we created some buy side liquidity here, right? As well as we have unmitigated supply here. So we can see everything was taken care of here, everything was taken care of here, everything was taken care of here. Now this is where my unmitigated supply is. It's in major premium of my range. Now I can look to take trades to the downside from that, right? Because of my market structure is bearish. So I would look for a liquidation right here, displacement candle, possibly imbalance or a fair value gap. Look to take this to the downside here. Now for counter trend, as far as this goes, now that I have this idea within mind, right, and I'm in discount within this range and my lower time frame market structure is in play, I can look to take longs up to this supply zone if everything comes, if everything falls, right? If I get those confirmations following, because now my plan is starting to set in form. I found my point of interest. I'm waiting for it to come to here. If it goes to there, right? I can use my lower time frames to confirm that and play lower time frame structure until that point is reached. And then once that point is reached, I can see what happens from there. If I break to the upside, I can now look to play demand over here. But if we don't break to the upside, our plan stays true and we can continue. So we're still um, literally flowing with the market, right? If we break upside, our plan changes, but we still have that full plan within action. So this is how we can adapt to the market and what's actually happening within the market and um, understand what is going on, be comfortable with it, and look to take trades. But yeah, so this is kind of what I'm looking for as far as ETH goes overall. I still believe we're bearish until we're over this 2078 high, as well as this 2176 high for the full range, right? This will also be in premium too. This short position, by the way, will also be in premium of this entire range. So that's another confluence as well, right? Our higher time frame premium as well as our lower time frame premium from this expansion move right here. Unmitigated supply, breaker structure to the downside, displacement candle, right? Everything is lining up. Buy side liquidity. Everything seems to be lining up. We just need market structure to follow now, right? That's going to be our final confirmation. So as I was saying, this is kind of what I'm looking for as far as ETH goes, unless we can breach these highs, right? Following this demand creation right here, liquidation right to the downside, created demand. If we create a higher low here, possibly breach this high and create a higher low here. I would want to see this high breach actually. If we breach this high here and create a higher low here, then I will probably look to take longs up into the farther parts of this range. And what I was talking about, I believe, with Glacier a while back was the profitability that we will probably be able to achieve within this range. Why I'm so excited to play this range, right, is because look at this, right? This entire impulse move to the downside, all these bear candles and all these imbalances that it left behind, right? This is a huge range, up and down. 100% up, right? 50% down. That's huge. It's a lot of profitability within this opportunity that it has given us within this large spool, this large range, this large bearish move to the downside that is getting a lot of traders to believe that we're going to continue to the downside. But now that we can see our ranges start to be created, we can see our liquidity start to be created as well, and we can see where the liquidity is rated, as well as where our supply or demand is introduced, and then following our market structure, we can look to take these trades. But yeah, that's pretty much what I have for ETH as far as our lower time frames go. If we go on to even lower time frames, I'll give you guys a little sentiment real quick as to what I believe could possibly happen. Right, so we just took out our long traders. We had that set up, took that trade to the upside. Just took some buy side liquidity, as Divine was saying. Saw that liquidation rate to the upside, right, following a possible 15-minute breaker structure to the downside. What I would want to see for this breaker structure to the downside is this low breached at 1821, following a creation of supply within this zone. If I get my displacement and institutional candles here, I'll look to take a lower high here, target this sell side liquidity here, or target this higher time frame weak low. Remember, our higher time frames are bearish, right? Our higher time frame bias is always in mind. So this is a higher time frame weak low, but a lower time frame strong low that served its purpose, right? We already caught this move. That's what we wanted to catch. I'm not worried about this entire setup anymore. I'm only focused on now the right side of the chart following all of this information. So we come create a lower high, and then we could possibly continue to the downside from here. This is what I would want to see as far as short setups go, because this could be a possible accumulation to distribution. But at the same time, this could come down, respect this demand, create a higher low, and continue to the upside. So how we're going to be able to figure out which trade that we're going to play here is going to be from this move here. If we get a displacement, something that says boom's going to the downside, right? Elephant candle to the downside, and then we get a lower high on lower time frames, so a 5-minute breaker structure to the downside here, then I'll look to take trades to the downside. But if we get a 5-minute breaker structure or a 15-minute breaker structure to the upside here following this demand mitigation, right, then I will look to take longs. So that's how we can figure out or kind of use one bias to eliminate the other to make it easier for us to be able to take trades, and which means it will make us more comfortable as well. But yeah, that's pretty much what I have for ETH as far as it goes. I believe we could be in reaccumulation here. The reason for that is because we haven't been showing any signs of displacement to the downside yet, no breaker structures to the downside yet, so we could possibly be reaccumulating, come up higher into the range, fill these inefficiencies and these lower time frame supply zones up here. That's all just going to be on market structure based off of how this goes within this area right now. We'd like to wait for that consolidation to play out, wait for the expansion, and then wait for that confirmation, and that's how we'll go from there. So does anybody have any questions or anything like that? We'll probably leave this open for about 10 more minutes, and I can go over some questions with you guys, and then I will probably upload this to the YouTube. But yeah, if you have questions, speak now or forever hold your peace.
Yeah, so on the 15-minute on Ethereum, we created a lower internal high, right? So we would obviously go for that weak low, right? At 1820?
1820. Are you looking at this right here? Are you looking at
Right,
this this internal move right here?
right.
Or okay, I got you. So let me go ahead and delete this actually.
Because so we ended up liquidating them. We got a higher low, but ended up getting a uh, lower high afterwards. You
Got
see?
you,
Or
got
am
you.
I wrong?
So to simplify this for myself, right? I see this large expansion move to the upside, right? So I'm going to be using this now as my range for yeah, for this internal move. Extreme high to low, right? Now I need my following breakup structures to confirm that this low caused a new high. So until this low is broken, I'm not looking to take any trades to the downside. Following, we would need that displacement candle and that sign that shows the market wants to go this way, right? So this is a lot of the times where you'll see I won't be in trades, right? As I'm waiting for that consolidation or the liquidity buildup, right? Because look at this, if we go internally, we now have a lot of buy side liquidity right here, right? And possible signs of lower time frame break a structure to the upside. So this could still respect demand here or come down, take out these equal lows right here, and then break structure to the upside and continue that way. So that's why I talk about adaptability and the flow of the market. And as a smart money concept trader, just because there's demand there or just because there's an institutional candle there does not mean it has to follow. We need everything to line up in place with our confirmation bias to be able to take our trade. So as far as lower time frames go, right, if I'm on a 5-minute, I see this displacement candle here. I see this break of structure to the upside here, so I could see this as a possible zone of demand. If we respect this, right, 1 minute or 2-minute break of structure to the upside following, then you could look to take a little long position on something like this, right? If we get this high broken right here, you take a long position with really small stops, right? You can target these highs or target this, what we would consider a weak high until these lows are broken, right? Yes, is there any other questions that anyone had? Did I answer your question? Did that make sense as far as this internal structure goes? Because now
Yeah.
if we're studying this, right, we can see that liquidation rate to the upside right here. We're looking for a break of a low that caused a high. So if I'm looking at this as a break of structure to the upside, looking at this as my demand zone, right, I would want to see this low broken to take
Okay.
aggressive shorts, or this low
Okay.
broken to take conservative shorts, which would be more confirmation.
Okay.
And then I would look to target either this sell side liquidity or these demand zones that was created, right? This accumulation, this higher low, that was at 1805 around this zone. I would look for imbalances in this zone to be able to target.
Yep.
Because
Yeah.
because
What caught
right,
my eye? Go ahead.
right, yeah, no, definitely, but because we have the possibility of putting in a higher low there, right? So until that low is
Mhm.
broken, then I can target lower.
Right.
If I'm
Okay.
playing just lower time frames. But our higher time frame is bearish, so if I get these breaker structures to the downside on the 15-minute and the hourly as well, you can look to target those higher time frame weak lows. But if we're entering on the minutes, right, we still need to remember to cover ourselves if we're in
Right.
a counter trend, right? But yeah, yes, that was my market stream and little smart money concept stream. How I kind of look at things, how I looked at East Range, and how this is really cool, right? For you guys to understand that all of these setups can be shown within this one pair, right? We looked at this one range, and I've shown you guys probably about 4 or 5 different setups, right, that we have found. And I could probably go through this range day by day, minute by minute, and show you many more, right? But this is what you guys start to see, and this is where you'll start to be able to only focus on 1 to 2 pairs and realize, wow, my ability to make 40%, right? Or to make all of these crazy percentages can be done within literally a day. If I do everything right, if I understand exactly what's happening, right? If I can study this down. So that's my goal as a smart money concept trader, right? Is to literally know what's happening on or what's going on at every minute of the day. So then I can get to the point to where I can trade for 1 to 2 hours for a day or 2 days and be done for the week, right? Or done for the month even, depending on how much I make, right? But that's what we want as smart money traders, as any type of trader, right? We want it to be able to be comfortable for us. We want it to be easy. We want it to make sense, and we don't want to have to look at it. So I hope this helped you out today. We'll definitely dive a lot deeper into this series, and we'll show a bunch of more setups and how these things kind of come into play. I'm going to be in chat. You guys can ask me questions whenever you want to ask me questions. My DMs are open always. Add me in chat or just DM. I appreciate you guys coming out, showing up, even though it's NBA Finals. But we got this going. Class will be recorded. Class will be posted to either YouTube or the Telegram. It will be posted to YouTube, but it might or might not be posted to Telegram depending on the file size. But I appreciate you guys popping out again, and I will catch you all later.
Any questions, comments, concerns, forward them to Flo's inbox. Make sure you blow him up so he has something to do.
Yeah, give me something to do, boys. All right, y'all. I'll catch y'all later. I appreciate it. Y'all have a good night.
This is